When you start a new job, they hand you this mountain of paperwork. And buried somewhere in that stack is some really, really important stuff about your financial safety net. So today, we're going to pull that information out of the pile and actually make sense of it. Let's dive in.
Let's just start with a tough but really important question. What if, starting tomorrow, you just couldn't work? How would you pay your bills? How would your family get by? It's a scary thought, for sure, but it's the exact reason these work benefits exist in the first place.
The best way to think about these benefits is as a financial safety net. It's woven together to catch you if something completely unexpected happens. And we're not just talking about healthcare here. This is about protecting your income and taking care of your family when you might be at your most vulnerable.
So, what's the first part of this net? Well, it's designed to protect your income if you get sick or injured and just can't work. This is where something called disability insurance comes into play.
So, what exactly is it? It's pretty simple, actually. Disability insurance is a policy that pays you a percentage of your regular income if you can't work because of an illness or an injury. It's basically a lifeline to keep things financially stable while you focus on getting better. Now, disability insurance isn't a one-size-fits-all deal. There are two different layers. You've got short-term coverage, which is for more immediate things, like recovering from surgery or having a baby. It kicks in pretty quickly and usually pays a bit more of your salary. Then you have long-term coverage, which is for really serious, life-altering situations. But here's a huge detail to look for in your own policy. Often, it only pays out if you can't perform any job, not just your current one. And that right there is a massive difference. So, how many of us actually have this protection? The numbers might really surprise you. Back in 2020, a staggering 58% of people working in the private sector had no access to short-term disability through their job. That's millions and millions of people who are basically one bad fall or one serious illness away from a financial crisis. And here's what makes that 58% gap even crazier. On average, it cost employers just $166 per employee for a full year of this coverage in 2020. It's a pretty small price to pay for such a critical piece of that safety net. All right, let's shift gears and look at the next layer of protection. This part of the safety net, well, it isn't actually for you. It's for your loved ones if you're no longer around. We're talking about life insurance. The whole concept is really straightforward. If you pass away, the insurance company pays a sum of money to the people you've chosen as beneficiaries. This can be an absolute financial lifeline for a family, helping them cover everything from the mortgage to daily bills to saving for college. Now, when it comes to life insurance through your job, you're probably going to see one of two types. Term life is by far the most common. It's simple, it's affordable, and it covers you for a set period of time. Then there's whole life, which is more complex. It never expires, and it actually builds cash value over time, almost like a savings account. And because of that, it's more expensive, which is why you don't see it offered in workplace benefit packages quite as often. But access to this kind of insurance is anything but equal. In 2020, about 70% of full-time employees had this benefit. But look at part-time workers, only 13%. That huge gap leaves a really big portion of the workforce and their families pretty vulnerable. Okay, so we've covered what happens if you're sick or injured outside of work, and we've covered the worst case scenario. But what if you get hurt specifically because of your job? Well, that brings us to the third and very different layer of our safety net, workers' compensation. The two key phrases to remember here are state-mandated and job-related. This is not an optional benefit that your employer just decides to offer. For most companies, it is required by law, and it only applies to injuries or illnesses that are a direct result of your work. And these state programs, they aren't just sitting on the sidelines. They're actively involved. They don't just write the rules, they administer the law. They make sure workers know their rights, they help settle disputes, and they even act as the judge for claims that can't be resolved. It's a whole system designed to oversee the process from beginning to end. So what do you actually get with workers' comp? You can think of it in a couple of parts. First, there's the immediate stuff, covering your medical bills and replacing some of your income while you're out. But then there's the longer-term support, like rehab services to get you back on your feet, and even benefits for your family if the absolute worst happens. This mandatory coverage isn't free, of course. Back in 2020, the average cost for employers was around $940 per employee for the year. But that number can change a lot, depending on the job.
An office worker might cost a few $100s to insure, but a construction worker could cost thousands. It's all about risk. Now, here is where things get really interesting. The workers' comp system was basically invented in the late 1800s to deal with industrial accidents, things you can see. So what happens when you throw a 21st century problem, like a global pandemic, into that old system?
Well, the COVID-19 pandemic threw a massive wrench into the works. Suddenly, the question was, is getting COVID a work-related illness? And the answer was, it's complicated. The biggest problem is trying to prove you actually got sick at work, right? It's almost impossible. To deal with this, states created this patchwork of different rules, often trying to give special consideration to frontline workers. It's been a real-time stress test for a system that was never built for something like this.
So, after all that, what have we learned? It's that each piece of your financial safety net has its own rulebook, and it's absolutely crucial to know how they all work and how they work together. And here they are, all in one place. You've got disability insurance for when you can't work because of a personal illness or injury. You've got life insurance to protect your family after you're gone. And you've got workers' compensation for when that injury or illness is a direct result of your job. 3 separate systems all working to keep you safe. And that leaves us with one final and, honestly, the most critical question of all. It's not about whether a safety net exists, it's about understanding the one you personally have. What are your coverage amounts? What are the waiting periods before it kicks in? What's actually covered and what's not? The only way to know if you and your family are truly protected is to find out.